Welcome back to the Dividend Diplomats YouTube channel. You're rolling with Bert and Lanny, the Dividend Diplomats guys, and we're talking about two of the most prolific dividend stocks that have been out there. Obviously, one has reduced their dividend this year with the spinoff. Both dropped significantly with new earnings releases.
Before we jump into these two companies, if anyone hasn't guessed them by now, smash that subscribe button. Give this video a thumbs up, everybody. This will be fun. These prolific is a way to say it. I mean, when these companies release earnings and news falls, it's not quiet. These aren't quiet stocks by any stretch. I mean, the market does care. People care. We care because we own them both. So yeah, it's like there's a lot of noise when these two companies like their earnings out because a lot of people are
A lot of noise, guys. So yeah, we're talking about AT&T and
following.
Verizon. They both released earnings here at the end of the week, to wrap up just the week ending July 22nd. Both had stock prices that completely plummeted, give or take 10%, over the
Yeah,
last couple of
both
business
stock
days.
prices ate a nice box of colon blow before releasing earnings because my God, this was not a good week for them.
Not a good week. And, so we'll kind of go through AT&T's earnings release, some of the high points, low points. We'll go over Verizon's earnings release here, look at the stock metrics using the Diplomat stock screener, the price to earnings, payout, and dividend growth, guys. We're really here to see what are you guys doing? What are we doing from AT&T stock and Verizon stock? Are these stocks to buy right now after the downturn in their stock price? Are you holding or are you saying,
Sayonara.
see ya?
And remember, everybody, now this analysis is pretty spot on between the two. The two of them are very comparable now. That was the whole point of why AT&T slimmed down, spun off Warner Media that merged with Discovery to give you Warner Media Discovery there. They didn't want the massive um streaming piece. Well, I'm sorry, I haven't had enough coffee yet this morning while we're filming this. But AT&T wanted to slim down here. They wanted to be the wireless company. They wanted to be the internet company. They didn't want to be a streaming service content provider anymore. So here we are. AT&T is going head to head against Verizon in there. So these earnings releases should be interesting. Lanny, you want to kick us off with AT&T's earnings release to see kind of what some of the news was from there, and I can cover what Verizon talked about?
Of course, guys. So just to give you a little frame of reference, AT&T was, in that 20 to $21 range. Recently actually was in the 21 to 22 range. But now once earnings, was released, they dropped to the low to mid $18 range. Levels that they haven't seen in forever. So obviously the stock prices dropped, call it 10%. And in that earnings release that AT&T gave, a lot of good positives were in there. I think around 800,000 net postpaid subscribers. I believe it was over 300,000 net fiber, ads as well. So overall growth in customers. And I know that they hiked their pricing in the plans that they have for customers. So they still came in with about $30 billion of revenue, which I think is what in some of our way, way earlier videos, we were anticipating about 30 billion in revenue. So great. So that's solid, right? Well, and they also had 56 cents in earnings per share. Not the worst, not amazing, but hey, that's already over half of their, forward dividends. So payout ratio you'll see is relatively safe. And as we expected, long-term debt was also down from December through now, well over $20 billion in debt pay down. Obviously, with the divestiture of, DirecTV and the spinoff of Warner Media Discovery. But the big negative thing that I think all the analysts plus the market and investors really lynched on was that free cash flow, Bird. Um, you know, First off, they already forecasted a decline of about 2 billion in free cash flow for the year, going from, around 16 billion into the 14 billion range for their forecast. So that punched the stock down. And then what I think happened is in that earnings release, they talked about 1 billion of the cash flow problem had to deal with collections. So their accounts receivable, you know, essentially the turnover of their AR is not as fast as they anticipated. And that could be a sign of obviously inflation on the customer base, signs that the consumer is struggling. And is this a sign of what worse could be coming for the remainder of the year?
Are you sure they didn't lend to a Three Arrow Capital too, Lanny?
God, I hope not. Yeah, I think their biggest customer was Celsius.
Yeah. Joking aside, I mean, for all that sucks for all of the Voyager Celsius people out there that are getting caught up in that Three Arrow turmoil. But no, I think that is the most interesting point. You hit it on the head, Landing. Collects when times are great, people are paying their bills, there aren't any issues. When you hit the recession, when you hit tougher economic times, people are dragging out whatever bills they can. They're slowing it down. You see it in the banking sector too. So it's trickling through to AT&T. So I think that's very fascinating. I get it. I see why the stock price comes despite the fact that they had the subscription ads and the fiber ads. I mean, it's an interesting thing to monitor. No,
Yeah, yeah,
I
yeah.
think
I
it's
mean,
a really cool
that's
data point that you called out.
yeah, and so the market reacted very unfavorably to AT&T stock, sending it, way down. I think at the low point was about 18 and a quarter. It ended the week at $18.40. And we'll just flash a few of the metrics right now. The price to earnings, guys, is about 7.3. Payout ratio on the dividends, 44%. No dividend growth for this mother effer.
You don't have to
Kids,
tell us. You don't have to
it's
tell
for
us
the
twice
kids.
about
That's for the kids. No cuss words coming from the DD on this. But
it.
the
Keep it
dividend
safe.
yield, the dividend yield is over 6%. So, again, about 4 times the S&P 500, 4 to 5 times your high yield savings account rate, albeit, you're probably losing some market value this week.
AT&T just can't help themselves with having a high dividend yield, can they, Lanny?
At one point, I was like, oh, it's going to be a 4.5 to 5%
Yeah.
yielding stock. Well, welcome back to 6% AT&T.
Yeah, but we should say the caveat with the dividend cut, with the spinoff, the dividend's in a much different position today than it was 6 months ago. But I do think that it's hilarious that they're going back. Let's get 7%.
Yeah.
7%.
Well, if we start seeing 8%, then well,
uh,
what else can they slim down? We're getting rid of our telecommunication. We're just keeping our marketing name. Um, so guys, that's AT&T in a
yeah,
nutshell. Again, great signs that revenue top line is strong. Revenue is
yeah.
going to be okay. Growing customer base. I don't know how fast they're able to pass on the additional cost to customers. Obviously, the customers are impacted by obviously inflation. The May's number was over 9%. We'll see with the Fed raising rates what that will do. Obviously to the inflation number, will that help? Will that not help? We'll have to find out. But again, that was AT&T's earnings release, sending the stock down well over 10%. But Bert, there's another telecommunications out here, and I know that you want to dive in right now to that.
Mint Mobile. No, I'm kidding. We're gonna talk. We're gonna talk through Verizon here. So it wasn't as much noise, not as much information buried in some of the earnings release. So it's gonna be a little different, a little slimmer than what we have from AT&T, but a lot of the same comparable price points and comparable metrics are going to be out there. So let's talk price first. Let's go into the price. Entering the week, Verizon over $50 a share. I think it opened the week at $50.63. Leaving the week, $44.45 share. It dropped 12.53%. Going into earnings, it was in the high 40s, it was 47. Earnings released, down. It kept falling down and down and down. It ended the day down 7% on Friday, leaving the market. So again, it's not as if Verizon had much better news for what's coming in there or their stock market there. This seems to be whatever's happening with AT&T is being mirrored in the broader telecom sector as well. So I think that's something you can extrapolate rather quickly looking at the stock prices. Let's dive in here because Verizon, remember what was happening last year in our earlier videos? AT&T was gaining subscribers, T-Mobile gaining subscribers, Verizon losing subscribers. They were attacking Verizon with their promotions. From there, how's Verizon responding? 268,000 net broadband additions, 12,000 postpaid net additions there. So quick comparison to AT&T. AT&T added 316 to their fiber, Verizon adding 268 to their broadband. So both are gaining on the internet front. But that's where AT&T is crushing them on the phone bills. They increased 800,000, Verizon not so much. So that trend is still continuing. AT&T continues to attack Verizon and eat away at their cell phone subscriptions.
Yeah, I mean, there it is, guys. I mean, not as many net ads essentially than AT&T. But yeah, how did their earnings per share and revenue look?
All right. So yeah, I guess I skipped that. I went right into the additions. Revenue 33.8 billion. AT&T, for a reminder, was at 30 billion. So Verizon's earning a little more on the top line. EPS for the quarter $1.24. That compared to AT&T 0.56 for the same thing. So obviously you can hear it here, see it there. Revenue was 10% greater than AT&T, but their earnings was more than 50% greater than AT&T for the quarter.
Wow. And then obviously from Verizon's dividend, they pay about 64 cents per share per quarter, so earning $1.24, about 50% on the payout ratio front. Now, Bert, what do they do about guidance coming up then for the
They cut
remainder
it.
of the
So
year?
I mean, I think cut it, but not significantly. Earnings guidance was 540 to 555 for the year. They lowered it down to 510 to 525. So that's their way of telling you. AT&T is telling you by letting you know that receivables are slowing down a little bit. Verizon's telling you that there's going to be some earnings compression here by lowering their guidance about 30 cents on their range. So again, another different way of telling you a recession's coming. It's going to impact Verizon's bottom line through increased costs, more issues with their customers. So it's interesting. I think it's interesting seeing here. So let's run them through the metrics with AT&T. Remember, we're going to put the comparison up at the end between the two. So I'm not going to read them, compare them side by side like we did for some of those metrics. Verizon's price was 44.45. You put that earnings guidance in there. We'll use 541 as their forward earnings. It gives you 822 for the PE ratio. Lanny, you mentioned their payout ratio already. Perfect payout ratio of 47%. Earnings growth, dividend growth, I should say, 17 years. They're close to being an aristocrat. Not a great dividend growth rate of 2.08%. So, I mean, it's what you expect. That's what AT&T was doing before they cut their dividend. So no big difference there. And the dividend yield is where it's becoming interesting for Verizon, where if they're getting slammed during the week, you're seeing their yield jump up as well. AT&T climbed to over 6%. Verizon's not quite there. Their current yield is 5.76%.
Wow. So there you guys have it. AT&T is yielding 6%, Verizon 5.76%. Both have similar PE and payout ratios, guys. I mean, very similar stocks right now in this ball game. I don't know if I don't foresee things getting better over the next 6 months. Probably a lot of this consistent theme of, they'll still they'll still hit top line revenue, maybe even exceed top line revenue guidance. But I think the cost price, their cost is going to be hard to control. Or what are you seeing with, I know you own both stocks. What are
Yeah.
you doing?
Well, I'm in a loss position in both stocks. So, I
Same.
mean, AT&T, I have a large position. I've kind of made my position on AT&T clear. I'm not looking to buy or add any more to my AT&T. I have a large position. I'm seeing how things are shaking out. Still, I mean, I want to see a little bit more news on that front. Verizon, I mean, it's hard. It's a hard sector. You kind of summed it up well a few seconds ago. It's like, how are things going to get better in the short term? Probably not. But I don't have as large of a position in Verizon. Maybe a decent time for me to keep adding a few shares here or there, lower the cost basis, kind of take an approach of what I was doing with Intel, where you started here with Intel, you saw the price fall down, keep nibbling while it's here, adding in 5, 10 shares, keep the cost basis dropping without doing a full blown, I'm dumping in thousands of dollars at the moment. That's kind of where my mindset is. What about you, Lanny?
Yeah, I mean, on Friday, I scooped up 2 shares on Friday of Verizon stock. I was like, under $90 for 2 shares.
Mhm.
Probably not, again, I'm not going all in on any of the two, more in a hold, but maybe I'll nibble if prices go down even further from here. AT&T, I'm not adding anymore. That's not that funny. I mean,
No, it's
but
it's just funny because we both have the exact same thought about AT&T.
yeah. But what are you guys doing? Again, we're more in the hold slash, again, Verizon's historically been the safer of the two. But safe is very loose right now. Um, But yeah, again, holding, added a little bit to Verizon, probably not adding at the current price this upcoming week. If I see it hit 40, I might grab a share again. But what are you guys doing out there? Definitely let us know. Are you buying AT&T stock, buying Verizon stock? Hit us up in the comments.
And everybody, when you let us know, while you're going down, scrolling down to that comment section, if you haven't already, give this video a thumbs up, subscribe to our channel. Everybody, thank you. Let's keep marching towards 15, 16, 17, 18, 19, and 20,000 subscribers here.
Guys, we appreciate the love and support. That was Bert and Lanny from the Dividend Diplomats. Over and out.